Recording in progress.
Right. Okay, guys. Good morning and welcome back. Hope you guys can hear me properly. I'm audible to you guys, right?
Yes.
Okay. So last week and I think prior 2 days we did about the basics. Still, we are doing the basics. Once the foundation is good, we can move forward fast, right? So still, I told you need to have a clear idea about. I told you assets and expenses. These two increase debit, decrease credit. You can remember it as X, asset and expenses. Liability, income, and equity. These three increase credit, decrease debit, equal as like. Or you can remember regarding debt click, right? Debit and credit, DR, CR, told you. In the increase side, you know, expenses, assets, drawing. Only the uh, equity, these two increase, this is decrease. This liability, income, and capital. Liability increase, income increase, equity also increase. When equity increase, it's capital. Equity decreases, it's drawing, right? So you need to have the idea. If I ask you quickly, you need to tell me the answer. If not, we can't move forward. If I ask you equity decrease, debit or credit, quickly you need to tell. Equity decreases. I want the answers. Initially you need to come. Yeah, sure. Equity decreases. Yeah. Quickly you need to tell. Equity increase means credit, so decrease means debit. Lie. So again, I'll tell you a way to remember. You know, there are two things I want to I tell X and lie. X mean, you know, now our concept is debit credit concept. The first one is debit, second one is credit. There is no any first second, right? The debit and credit, debit credit, debit credit, debit credit. So in the ledger account, I told you the left side is the debit side. Can you remember, guys? Right side is the credit side. Are you okay up to here? Right now, you know, in the alphabetical low in the alphabet, the first word is A, right? Right, in the lie L, right? Now first word in X, increase debit. You can remember in X, increase debit, because A is the first word, first letter in the alphabet. So in first word, first letter, increase debit. So the decrease is credit. Then you can remember lie, increase credit. Understand? Clear to you, right? So right, so likewise, just remember anyhow, right? And I gave you different double entries last week, right? Hope you can remember. So right, you know, especially about the stocks, though the stocks are asset, when we purchase stocks, we concern as purchase expense increase. Can you remember? Right, though the though the stocks are asset, when we sell goods, we concern as sales income increase, so we credit the sales account. Hope you can remember, right? Likewise, you need to have a clear idea about the double entries. Without having a proper idea about the double entries, you can't move forward. Clear? Right? That's why First of all, study all the double entries, right? I gave you a chart. If you are not studying and about these things, though how much I do in future, you can't understand, right? Still, I'm not doing the book. I'm just giving you the backgrounds. The background is okay. Other things really easy clear, you guys, right? Okay. Now I gave you 12 transaction, right? So before moving to the textbook, today we are finishing one. What is the requirement? Below are the opening balances and 2025 May month transactions of Sunimal's business. Prepare the ledger accounts, balance the ledger account, prepare the trial balance. I'll explain everything to you, right? Still, we haven't do anything the previous lesson. Just I tell you, you know the format of the ledger account. This is the format of the ledger account. Hope you can see, right? You can see this is the debit side. Date, detail, value. The debit side. The credit side. Date, detail, value. Right? Once we apply all the things, you can have a clear idea. Now, so in A, they're asking about ledger accounts, right? Ledger accounts. I told you the place where we maintain all the ledger accounts. What is the term we call? Ledger. Can you remember, guys? The place where we maintain all the ledger accounts. I'll write rupees sign on top and 2025 sign on top. Then in all the ledger accounts in the date column, we don't need to repeat the year, right? So you know the format of the ledger account this way. You can draw like this, right? When you're drawing the ledger account, look here. You think this is your CR book. Can you hear me, guys? Think this is the CR book, right? Then take the first page, the page you are seeing. Then you can find the middle point like this. Just think this is the page, right? So you can do like this and you can find the middle point. Understand? Easy clear, you guys? Don't do in a heavy manner, then the page will break, right? Just in a roughly find the middle point, right? So then the left side, the red ruler, you know, the in the left side you can find the red ruler. You can write now. First of all, once you find the middle point, just do two parallel lines in there. Just draw two parallel lines. Two parallel lines in there. Two parallel lines in the middle, right? Left side red ruler, right? Red rule, which means like this thing. Now, if red do anyhow, you can see this is the one. This column. Can you hear me, guys? This column.
Yes.
The column, first column. Take as the debit side date column. Date. Date. Then the keep more spaces to detail, then the value. In right side also date, detail, value. Right? Since we need to balance it as well, date, detail, value. Date, detail, value. Understand? Keep like 10 to 12 lines for the first one. No issue. Let's do like first 4 using the full format. Other things I'll use the T format. Right? Date, detail, value. Then I'll go to the other one. Also, once you find the middle point, left side of the middle point is the debit side, right side the credit side. Date, detail, value. Date, detail, and the value. Still we are doing the basics. I'm giving you the good background. Detail and the value. Date, detail. Yash, are you okay up to here?
So we have to use a margin, right?
Sorry, you have to
So we have to use the side, like the margin, right?
margin.
Yeah,
I
so we have to use that, right? Like
yeah
the
yeah
whole.
yeah yeah. The margin means what?
So like on the book on the left side, like that line.
Yeah yeah. Margin also you need to take, right?
Okay, so
That is the date column of the debit side. Understand, right? When you're drawing the second one, just keep to at least like keep 10 to 12 lines in here, then keep 2 lines. So for the second one also keep like 6 to 10 lines. Though there is more space, don't worry.
for the first one, how much do I keep again?
Sorry, for the first one,
How much lines do I keep?
like 12,
Okay.
12, right? Sinal fine, right? Sinal, all good. Then for the next one also, date, detail, value. Okay, oh, first 3 accounts using the full format is enough. Date, detail, value. Date, detail, value. Right. For the first one also keep like 10 lines, right? Second one and third line also keep like that. 10 in here, 10. Right? From the fourth onwards, let's use the T format. All we don't need the full format. T format, can you remember guys? T format, when you find the middle point, look here. When you find the middle point, just draw the T format like this. Only the middle point with one parallel, one line. No columns. Is the term called T format. For all other ledger accounts, keep like 6 lines. That's enough. I'll tell you why later, right? Right. So likewise, draw like 1, 2, 3, 4, 5, 6, 7, 8, and that's enough. Then let's, by the time when we are doing it, let's draw the other thing. Finish up to here and raise your hands. Done, right? Liashi also done.
We had also done the T format, right?
Yeah, only no. First three full format. Other
Yes,
things,
other five, right?
yeah, other fights use the T format. That's fine.
Okay, sir. So done, sir.
Yeah, Shia, fine.
Drawing a T form.
Okay, once you finish, let me know. Then we can start.
Done, sir.
Right. Hold on. Nice. Now let's start from the beginning. Huh? Let's see. First one. In here, it clearly says what are the things it's mentioned. Below are the opening balances of 2025 May month, opening balances as transaction. Opening balances means last month closing balances. Understand? So opening balances we need to write in relevant account. There are cash, debtor, motor vehicle, bank loan, creditor. Let's do relevant thing. First we take the cash account. Write the first account heading called as cash account. Every account belongs to accounts element. You know, cash account is an asset account. So assets increase is debit side, decrease credit side. Since you are a beginner, just write. You know, this side is the debit side, this is the credit side. Since cash is an asset account, when cash received to the business, we debit. Cash, you know, in a corner, just write it. You need to have a clear idea. X, increase debit, decrease credit. Lie, increase credit, decrease debit. Right? We have a clear idea about this one, right? So, okay, guys. Next one, debtor balance. Debtor means one. Debtors are the one who took our goods on credit basis. So, debtor, in another word, trade receivables. Debtor or trade receivables. It is also an asset account because they own money to us. So the increase side is debit, decrease side is credit. So keep the next one for the another one because I'll tell you why. Let's take a small one. Motor vehicle account. So I'll get the next one as motor vehicle account. Right? So motor vehicle account is also, motor vehicle is business asset because it belongs to the business. So assets increase is debit, decrease is credit. Bank loan, next account. Bank loan account. Bank loan account is which kind of account? Can anyone tell me? Any idea?
Debit.
No. I mean the accounting element. Asset, liability, equity, income or expense. Bank
Liability.
liability because it is a payable. When we obtain a bank loan, it is a business liability. Understand? Bank loan is a liability account. So increase side is which side? When liability increase? Quickly you need to come.
Credit.
Yeah, increase credit. So this is the increase side, this is the decrease. Creditor account, next one. Creditor account. Creditor account. Creditor account means what? Who are creditors? Or another word, trade payables. Creditors. In another word, trade payables. Yes. Any idea? Creditor or trade payables.
The element.
Yeah, accounting element. Asset, liability, equity, income or expense. Every account belongs to one of the accounting element.
Asset.
Creditors, I told you two parties. Debtors are the one who purchase our goods on credit basis. Creditors are the one who supply their goods on credit basis to us. So we purchase creditors, we purchase goods on credit basis from that part.
Also liability.
It is also a liability. Liability. So increase side, which side? Credit. Decrease side,
Debit.
are you okay, Liasha? I want the answers, huh? You're facing this November, so we need to go faster. Just right. Let's write the opening balances. Opening balances comes from the increase side. Right? I'll tell you why at the end. Cash balance 500,000. Balance we are writing in here 500,000. Write it as balance brought forward, BBF. If you need the definition, okay, look here, guys. Keep another, how much you, how many pages you spend to draw these 5 key accounts? Can you tell me? How many pages?
3.5.
Huh?
3.5.
3.5?
So I mean 2.5.
2.5. Now only for these 5? Not these things. Only for these 5.
So 1.5.
Keep another 1.5 and write the heading called workings. Workings. Keep another 1.5 for the, because there are more ledger accounts. Write the heading, keep another 1.5 to draw the other ledger accounts. Write workings. Just remember, BBF we term as balance brought forward. BBF means balance. In workings also write this one as well, then you can have a idea. Oh, working, so in every page, top of the every page, write this one, then you can practice it, right? BBF means balance brought forward. Balance brought forward. Okay, all good, right? So you know opening balance was on May 1st, 1st of May. So 1st of May, we don't need to write the month, year, because we already mentioned the year in here. Rupee side on top. The place where we maintain all these ledger account we call as ledger. That's why the ledger heading on over there. Next one. Debtor balance 300,000. 300,000. The asset accounts balances come from the debit side. You know, look here, guys. Asset and expenses, last month closing balances comes from the debit side, increase side. I'll tell you why at the end. Liability, income and equity accounts, BBF comes from the increase side, credit side, right? Okay, 1st of May, balance brought forward. Next one. Motor vehicle account. Now there are no columns. Look here, guys. From the motor vehicle accounts, there is no any column. But from your mind, you need to remember the columns. Look here, right? Initially, first one, the date, description, value. So first we are writing the date without drawing the column. Just keep some space, then BBF, right? You know the balance is how much? 800,000. 800. Understood? Right? Without drawing the columns, we see our first date, then the description, then the value. Then the bank loan. Bank loan is a liability. I told you liability, income and equity. Balance brought forward from the increase side. So 400,000. 1st of May, balance brought forward 400,000. Creditors or trade payables liability. Balance comes from this which side? Debit side or credit side? Every time remember, left side is the debit side, right side of the credit side. Just remember, not all the accounts debit side is the increase side. Only asset and expenses accounts increase side is the debit side. Liability, income and equity accounts increase side is the credit side. Can you remember, guys? That's why I wrote plus and minus on top since you are a beginner, right? So creditor account is a liability account. So 1st of May, balance brought forward how much? 200,000. Still the opening balances are not finished. Finish up to here and raise your hands. Then I'll show you the other things. Right, all done, right? But the opening balances are not okay. Just remember, I told you total assets of the business every time should be equal to total liability plus equity. Plus equity, right? Now in here opening, There were three assets, opening assets. Just remember. Opening assets, how much? Can you tell me the opening asset total? 500,000 plus 300,000 plus 800,000. $1.6 million, right? Opening liability, two things, bank loan and capital. 400,000 plus 200,000. How much? 600,000. Can you hear me, guys?
Yes, sir.
Right. So I'll use this, write it using thousands, then it's easy to me to write. Opening asset 1,600, except three things. Liability 600. Now the opening assets are not telling with liability plus equity. Liability plus equity also should be 1,600. Understood? So if the liability is 600, equity is 1 million. 1,000 means including further three zeros. There is a 1,000. So opening, now I told you to represent owner's investment, there is a thing called capital account. We need to draw a capital account, and don't try, I'll give you enough time. Look here, you need to have a clear idea. You need to credit 1 million. Now why is that? I told you every time, because of a transaction, debit total should be equal with credit total. Is it clear to you guys? Look here, don't write, I'll give you enough time. Debit total should be equal to credit total. Now without the capital, debit total is 1.6 million. Credit total is 600,000. It's not tallying. When the opening balances also, debit side equal to credit side, the remaining balance, we only for the opening, we identify as owner's ownership, because every time there should be owner's ownership value. It is the capital. Capital is an equity account. When equity increase, it's credit, decrease debit. That's why we debit, that's why we credit 1 million. So debit total 1.6 million, credit total also 1.6. Debit and credit tally. Write the working and draw the capital account and raise your hands as well. Write everything. Don't do other things, pay attention. When we do 2-3 questions, you can have a clear idea. Once you finish, raise your hands. If there's any matter, please ask.
Excuse me, sir.
Yes.
Sir, after writing asset, what's the other part? In the working section?
Assets equal equity.
No, sir. Yeah, sir. Not the second one. Yeah.
The opening assets equal 500,000 plus 300,000 plus opening assets equal 500,000 plus 300,000 plus 800. Okay. Lashia, fine. Fine, fine, right? All good?
Yes, sir.
Right. If you need any support, let me know. Don't hesitate to ask. Next one. These are the May month transactions. Let's see. Let's go with the May month transaction. First one. What is the first one? Owner invested 100,000 to the business. Now you know, tell me the answers. Huh? Hello, can you hear? To practice it, you know, tell me the answers. Owner invest money to the business. Just build the double lane to get the support of the dual impact. What business get, guys? Cash. Correct? Right? When the business get cash, business cash asset will increase. Am I correct? Right?
Yes, sir.
When asset increases, debit.
Debit.
Debit. X. Increase debit. Remember it.
Okay, sir.
Right? When owner invests money, owner's ownership also increase. When owner invests money, we write it in where? Capital. Understand? Right? Owner's investment, we write it under capital. Capital is an equity kind of account. When equity increases, it's credit. Correct? Correct? Don't write, look here, pay attention. How we write? Owner invests money 100,000. Look here, this is the important part. When owner invests money, since cash asset increase, we write in the debit side of the cash account. we write credit side of the capital account on. I told you, because of one transaction, one account debit, one account credit. This is the credit side. So two parallel lines this side. Before two parallel lines, it is the debit side. Understand? Clear? Because of one transaction, one account debit, one account credit. Opening balances, there are in many transactions, many accounts, but the total should be tally in the opening. So I'll write date as number 1 because there is no any date. Look here. What we write in the detail column. In detail column, we write the other account name. Don't mess it up. In the cash account, we write the credit entries belonging as account name. Now the credit entry in the capital account. So in debit side, we write as capital account. Easy, clear to you guys? Okay. In debit entry, we write where the credit entry is, which account. In credit entry, we write where is the debit entry in the asset account, right? Not the cash asset, just correct it as cash account. Sorry guys, just correct it as cash account, right? AC, cash account. AC means accounts. If it is not clear to you, just write in the workings as well, since you are a beginner. AC means account. Right? So in here we write cash account. Where are the other entry? Liashia, are you okay up to here? Right. Where are the other account? That is how it goes. Right? Write it. Right? Cash account debit. In the description we write capital. Capital account credit. We write cash. All good. Right. Let's go with the next one. Cash purchase of goods 20,000. Now tell me the double entry. I told you, look here guys, you need to have a clear idea. In the dual impact, I told you, when we purchase goods on cash, we give cash, but we receive goods. Understand? Right? When we give cash, cash asset decrease. Are you okay up to here guys? Right?
Yes.
When we give cash asset decrease. Asset decrease means it's credit. So we write it under credit. Look here, don't write. How much? 20,000. 20,000. Right. When we receive cash, when we receive stocks, stock asset increase. But I told you, hope you can remember about this part as well. About the stocks, right? You need to have a clear idea. Shall I erase this part? Okay. So I'll send a picture to the group as well, workings one by one. Right? Hope you can remember. Right? Look here. This is the business. Business purchase goods. Purchase goods. Sale of goods. In both way, either cash or credit. Sale of goods also cash or credit. Both. When the business purchase goods, there are two things, right? Dual impact and the double entry. Look here. Dual impact and the double entry. When the business purchase goods, stock asset increase. Stock asset increase. I'll write increase. But I told you we can't maintain any stock account in the ledger. Because of that, stocks purchase we concern as an expense. Purchase expense increase. When it comes to the double entry, stock asset increase obvious. Why? We are receiving stocks. Stocks are business assets. But we concern to calculate the profit we earn through purchasing and selling stocks. We need to concern as purchase expense increase. When we sell goods, stock asset decrease. Yes, that is the dual impact. But when it comes to the double entry, I told you, we need to concern sales as sales income increase. Right? Right? Then we can calculate the profit equal income minus expenses in later, which profit we earn through stocks. Profit through stocks we can calculate like this. This sign, this symbol means profit. Right? Now there is no any stock account in the ledger. Easy, clear, you guys? Are you okay up to here? Right?
Yes, sir.
Now when we purchase stocks, where we record? Purchase account. Easy, clear to you? Part is really important. Purchase account. When we purchase account, when we purchase stocks, we record in the purchase account. Purchase account, which kind of an account? Expense account. Expense increase debit, decrease credit. Are you okay up to here, guys? I'll give the time. Right, just see it. Then purchase goods cash basis 100,000. Sorry, 20,000. Right? Purchase goods on cash basis 20,000. Cash asset decrease. Purchase expense increase. How much? 20,000. In the detail column, we are write where the other entry. In credit entry, where we write where is the debit entry. Debit entry in the purchase account. In the debit side, we write where the credit entry, cash account. Write it and raise your hand. Number 3, workings as well. Hope you can see the workings. Workings also. Dual impact and double entry, two things related to the stocks. Just remember. All done? Fine, right? Okay, next one. Number 4. Number 3, right? What is the number 3? Credit sale of goods 35,000. Look here. And now you need to think, when we purchase goods on cash, we give cash. When we purchase goods on credit, we give cash? No. Understand? Can you hear me, guys? Purchase goods on credit means we give cash later, not now, right? Purchase goods on credit. How much? Credit purchase of goods. You can see its number. Purchase goods on credit. Purchase goods on credit. Credit purchase. Sorry, credit sale. Sorry, the third one is credit sale. Credit sale of goods 35,000. When we purchase goods on cash initially, I told you give cash and stock receive. I told you stock receiving we consider as purchase expense. Now we sell goods on credit basis. We give stocks. I told you when we sell either cash or credit, we give stocks. So our stock asset decrease, but to calculate the profit we earn through stocks, we need to concern sales as income. So we need to have another account called sales account. Sales account is which kind of an account? It is a liability account. Income account. Income account. When income increase its credit, income decrease its debit. Right? Look here, don't write, I'll give you enough time. When we give stocks on credit basis, the party who taken our goods, we identify as trade debtors. Why? They are not paying cash, they are paying cash later. Till they pay cash, we identify them as an asset. So debtor asset increase, purchase sale of goods on credit 35. Number 3, 35,000. Right? Debtor asset increase, so debtor account debit. Sales income increase 35. In here we write it as debtor account. In here we write it as sales account. Hope it's clear to you. Right? Finish up to here and raise your hand. Finish up to here and raise your hand.
Done.
Right. All done, right? Okay. Next one. Number 4, right? Credit purchase of goods, right? Now in number 4, credit purchase of goods, how much? Credit purchase of goods 90,000, right? Credit purchase of goods 90,000. Now look here, I told you, though we purchase goods cash or credit, purchase expense increase. When we receive goods, we concern as purchase expense increase. But when we purchase goods on cash, cash account credit, by we give cash. But when we purchase goods on credit, the other party who gave stocks on credit basis, we identify as what? A liability. What is the term we call for them? What is the name we call for the credits? Credit. What is the term we call for the other party as? Creditors. Can you remember, guys? Right? When we purchase stocks on credit basis, creditor liability increase. Right? Number 4, 90,000. Right? And purchase account debit 90,000. Why? Purchase account debit, creditor account credit. Purchase account creditor account. Right? Right, number 4. All good?
Done.
Right. Yeah, Shia, fine.
Yes, sir.
If you have matter ask. Right. Number 5. Owner's cash drawing 7,000. When owner withdrew cash, business cash outflow. Understand? Withdrew cash means owner taking the cash. Right? When owner withdrew cash, cash asset decrease how much? 7,000. Right? Number 5. The credit entry in the cash, because cash asset decrease, credit. And we need to have another account called drawing account. You know, owners withdrawals we record under drawings account. Owners purchases we write it under purchase account. Owners withdrawals we write it under drawings account. It is kind of an equity account. Equity increase credit, decrease debit. When owner withdrew goods, owner's ownership decrease. So drawing, can you remember in debt click? Drawings comes to the debit, right? So number 5, 7,000. In drawings account we write as cash account. In cash account we write as the other credit debit entries name, drawings. All good? Next one. Goods drawings 2,000. Now I told you in last week, right? And also now, look here, business purchase goods, sale goods. When business purchase goods, we identify purchase expense increase. When business sell goods, sales income increase. The double entry. When owner withdrew goods, we identify as purchase expense decrease. Look here, means in the, this is the double entry. Double entry. But the dual impact is stock asset decrease, why stocks going out. But when the purchase means expense increase, now think 100 worth of goods we are selling to 120. We are keeping 20 profit margin. Owner is withdrawing not from the 120 value. Owner withdrawing the goods 100 worth of goods. That's why when we purchase goods, we debit the purchase account. Since it is an expense account, expense increase decrease. When owner withdrew goods, things owner withdrew 60, purchase account credit, right? So that's why in here this says owner's goods drawing 2000. When owner withdrew something, we write it under drawings account. Owner's goods drawings 2000. Number 6,000. Though it's a cash drawing or goods drawing, drawings account debit decreases. When owner withdrew stocks, purchase account credit 2000. Why? Purchase expense decrease. Drawings account, purchase. The working as well. Make sure to write the working.
Is there a way that you can send this screenshot? Because it's a bit blurred for me.
Oh, which one?
Like the whole screen.
Is
I
it?
think my internet's bad.
Yeah.
Right.
Shall I send a picture to the group as well?
Yes, sir, if you can.
Yes.
Do we have class?
Sorry.
Do we have class tomorrow?
Yeah, shall we do tomorrow as well, right? Because we missed the Thursday one as well. I'm okay with that. If you're okay, we can. We don't have any other.
What time?
Around like 3, 4. Both okay?
So it's a 1 hour?
No. I mean like, how about like 3 to 5? Good, because I don't have
We
any other.
can.
If you are okay with like Friday morning or Thursday morning, I can do like that. You're having schools, right?
Morning can't school. Yes,
Schools,
sir.
yeah. That's why. Because also this week also sometimes matter because I don't want to miss the classes. That's why. Now the last, not this week, last Thursday miss class I cover using 2 days, right? Understand, right? Last week 3 hours, this week also 3. Let's see. I send a picture.
Thank you, sir.
You okay up to here? Yes, right.
Mm.
Right. We finished up to 6, right? Now 7. What is the number 7? Paid bank loan installment 7,000, including 2,000 bank loan interest. This part is really important now. I'm going to erase this. Right. It's like this. Right. Now think, you have obtained a bank loan. We obtain a bank loan, how much? You can see our bank loan value is 400,000. Right? We are paying it installment wise. Installment wise means monthly. Right? In a month, we are paying capital amount. We call it as like amount 11 to the bank loan plus interest. Both we are paying in a month. Why? When you obtain a bank loan, once the payment time is period, totally you have been paid more than 4,000, right? Okay. More than 4,000. Why? It's more than 400,000. Once you obtain a bank loan 400,000, the total amount you have been paid amount, it can be like 700,000. Like let's take 600,000. Because since you are giving installment wide payment facility, they are charging interest. Understand? Clear, you guys? Right? The interest is an addition. Now monthly you are paying. When the monthly amount includes amount relevant to this 400,000 bank loan and this interest. Now in here it clearly says paid bank loan installment 7,000 including 2,000 interest. Now installment in an installment equal amount relevant for the bank loan plus the interest, right? Installment is 7,000. This 7,000 includes 5,000 interest. If this 7,000 includes 5,000 interest, 2,000 is the amount relevant for the bank loan. Clear to you guys? Sorry, 2,000 is the interest. Interest is 2,000. So if the interest is 2,000, 5,000 is the amount relevant for the bank loan. The interest, the additional payment, this is an expense to the business because this is apart from the bank loan. We identify as expense increase. The 5,000, this 5,000 relevant to bank loan. So bank loan liability decrease. Liability decrease. Because this 2,000 is not relevant for this obtained bank loan. It's an additional payment because of the installment wide facility. They are charging an interest. Totally we are giving cash 7,000. 7,000 means cash. Asset decreases. There are 3 entries. What are the entries? You know, we can write the 3 entries. I'll write it in here. Bank loan account debit. Liability decrease 5,000 because 5,000 is the relevant, because this 7,000 includes 2,000 interest. So bank loan is 5,000. Bank loan interest account also debit. Why? Its expense increase 2,000. Totally we are paying cash. So cash account credit 7,000. 2 debit entries and 1 credit entry. Easy, clear to you guys? I told you it's also can be happen, right? Turn on the videos and wait. 2 debit entries, 1 credit entry. The debit total should be tally with the credit total, right? So in the ledger, you need to have a new account called bank loan interest account. Look here, bank loan interest account. It is additional payment expense. Increase debit, decrease credit. So in ledger number 7, cash credit 5,000, bank loan account debit 5,000. Now again, cash 7, cash credit 2,000, totally 7,000. Bank loan interest account debit 2,000. In here I wrote the 4 entries using 3 because credit 5 plus 7 I wrote it as 7. 5 plus 2 I wrote it as 7 in the working. Hope it's clear to you. Can you hear me, guys? Send me a thumbs up.
Yes, sir.
Right? Make sure to study, huh? Right. Can't understand, let me know. So 5,000 goes bank loan cash account credit, bank loan account debit. Cash account credit, bank loan interest account. Cash. Write the working. So make sure write this working as well. Full work. Right? And raise your hand. All good, right? Once you finish
Just
raise,
right, sir. Indeed.
okay. Once you finish raise,
Done, sir.
yeah, share that. Hope all okay. Right. Shall I raise? Okay, I'm going to raise. Right. Number 8. What is number 8? Receive rent income 35,000. When we receive rent income, right? Cash account debit 35,000 by cash setting. Rent income, it is an income, so we need to have a new account called rent income account. Rent income is an income account. Increase credit, decrease, right? Receive rent income 35,000. Cash account, rent account 35. Because rent can be expense as well, huh? So better to because if we pay rent, it is an expense. If we receive rent, it is an income. Next one. Number 9. Cash received from debtors 100,000. when we receive cash, right? You know, cash account debit 100,000. So we are receiving from debtors. When debtors pay back, debtors decrease. Why? Now they are no more our debtors. Cash account here, debtor account. Right? Cash account, debtor. Hold on. Right. Next one. Now this part is really important. Now, last two. Owner paid to business creditors from his personal money 25,000. Owner paid to business creditors from his personal money. Look here, that part is really important. Now we are paying cash to business creditors. Now think there are two things, business and owner. The creditors are being paid by not from the own business money, from the owner's personal money. Using owner's personal money, we paid to business creditors. Which means it kind of owner's additional capital. Owner gives cash to the business. Why? Now this is business, this is owner. Business and owner, two different parties. This is creditor. The creditor being paid by owner's personal money, not from the business money. Anyhow, when the creditor was paid, business creditor liability decrease. But when owner paid from his personal money, it kind of owner gives his personal, owner again invest money to the business. Why? The owner not paid money to the business, invest money to the business. It kind of like an investment. Why? Now think, for an example, you are having something to pay. One of your friends, now your friend paid that amount to the other party on behalf of you. Right? So now you need to pay money to that your friend. You need to pay that money to your friend. Why? So he or she paid money on behalf of you. So likewise, owner paid to the business. Creditor means owner invest money to the business. Is it clear? You send me a thumbs. Right? Understood? Are you okay up here, guys? Right?
Yes, sir.
When owner paid to business creditors from his personal money 25,000, creditor liability decrease. Yes. Number 11. Right? Creditor liability decrease. Capital equity increase. Number 11. Why? Because of owner invest money to capital account 25,000. Number 11, cash account 25. Right? Last one. Sole motor vehicle on credit basis. Sold motor vehicle on credit basis to Amara's business for the same value. When we sell motor vehicle, think about a motor vehicle. This is the motor vehicle. It's for the same value, right? Same value. When we sell the motor vehicle for the same value, motor vehicle asset decrease 800,000. We sold on credit. The party who are taking the motor vehicle is not a debtor. Debtors are the one who take our stocks on credit basis. Motor vehicle is not our stocks. This thing which we purchase for the usage purpose. By the time we expect to sell it. So because of that, we draw another account called Amara's business. Amara's business. This is not a debtor account, right? Because we are selling a motor vehicle. So this is an asset account. Because he is purchasing it on credit basis. Right? So number 12, motor vehicle business credit, motor vehicle account credit, Amara business account, finish all the things up to here, raise your hands, then I'll show you how to balance the ledger accounts. I'll show you how to balance the ledger. Once you finish, raise your hands. Cashier done.
Mine is done, sir.
Right. Just wait.
Done, sir.
Okay. Right. All good, right? Okay, now look here. The important part. How do we balance the ledger account? I'll start from the cash account. Don't do any other things. I want your attention. This is how we balance the ledger account. First, in both sides, we keep one line. Look here, really important. One line space. You need to keep at least, don't do, I'll tell you. One line space. Then in the same line, you need to draw two like this. In maths, I think when you are balancing something, you are drawing this one. Can you remember? Like this. Understood? This one, right? Once you keep the first line free, right? When you are balancing it, you need to write this one in the value. First of all, you need to find the higher value side. Look here, important. Every day you need to do this one from here in out. If you are not able to do it, you can't move forward, right? First of all, you need to find the higher value side. Most of the time, higher value side is the increase side. In increase side in everything, but it will be changed, right? Sometime. Now in the cash account, higher value side is the debit side. Clear to you guys? Increase side, right? We need to take the higher value side, right? Total 500,000 plus 100,000 plus 35 plus 100, which means 735,000. 735,000, right? Lower value side also, we are writing the higher value side total. That is the secret. Huh? We are first of all finding the total higher value side. In here, higher value side is the debit side. We are writing in the lower value side. Then take the total of the lower value side. Look here, the lower value side total is 20,000 plus 7,000 plus 7,000 plus 5,000 plus 2,000. Means 34,000. Am I clear to you guys? Right? 34,000. Right? 34,000. Right? So the lower value side total is in here 34,000. Right? Just wait. I'll take the total again. Yeah. 34,000. $34,000.
How much is it in the debit side?
Sorry.
Sir, how much is the total in the debit side?
So did we miss something? So I think we missed something. Drawing. Did we miss commission to write? Did we miss something? Some we missed the 10th one, I think. We missed the 10th one. Receive cash from debtors 100,000. It's 9th, right? Oh my god. 9th. It's my matter, right? Receive cash from debtors 9. Right? B means the 10th one. Look, correct it as 9. Na? What is the 10th one? Paid commission 7,000. Sorry, yeah. Can you hear me, guys? Right? We need to record it as well. Right? Hope you have some space. Paid commission means when we are paying commission, cash asset decrease as commission goes 10,000. Understood? Sorry, 7,000. Paid commission 7,000. Write it. You need to open another account in the ledger as commission expense account. Commission expense account. It is an expense account. When expense increase, debit, decrease, credit. Paying means doesn't decrease. I told you. Number 10. Cash 7,000. This is how you need to open a new account called commission. Right? All good, right? Clear? Right. Now look here. Right. Now look here how to balance the ledger account. Again, first keeps one line space, then draw parallel lines like this in the same ruler. Find the higher value side. Most of the time, increase side is the higher value side. In here, debit side is the higher value side. Can you take the total? 500,000 plus 100,000 plus 35,000 plus 100,000, which means 735,000. Clear to you guys? Right? 735,000. Right? Write it in the lower value side as well. Now get the total of the lower value side. Lower value side total 20,000 plus 7,000 plus 20,000 plus 7,000 plus 5,000 plus 2,000 plus 7,000, which means credit side total is 41,000. We are not writing it anywhere. Just we are finding the total. Look here. Can you hear me? Right? Higher value side total we are taking. We are writing in the lower value side as well. Now, deduct the lower value side total from the higher value side. 735 minus 41, it's 694. We are writing in here 694. Balance carried down BCD, right? Balance brought forward, right? 694. Look here, I'll tell you why. Now, first we are find the higher value side total and get the total of the lower value side. We deduct the higher value side total from the lower value side. Now, actually, what we are doing in the balancing of ledger account, now the higher value side deducting from the lower value side total, right? When we are balancing, BCD means 694,000, which means higher value side total deduct lower value side total, right? BCD means balance carried down. Balance brought forward comes to the other side. If BCD comes from the credit side, BBF comes to the debit side. BCD comes to the balancing upper one. BBF comes to the balancing in here downside. Clear to you guys? When you are balancing 2-3 things, you can have a clear idea. I'll explain it again. Now let's go to the debtor account. Keep one space in both accounts. I told you most of the time increase side is the higher side. In here you can see the increase side is 100,000. 100,000. Right? So what is the total of the decrease side? Decrease side total is the increase side is this one, 335 debit side, sorry. 335, the increase side is debit side, right? 335,000. Increase side is the debit side. You can see 300, I thought like 30. 300,000 plus 35. Increase side is debit side, 335. From that 335, deduct 100,000. How much? Lower value side total 200,000. So 235,000. BCD. The other side PBF 235. Is it clear to you? Are you okay up to here, guys? Can you hear me?
Yes, sir.
Okay. Now the next one. Let's balance this. Keep one line. Get the capital account total in here. Capital account total. In here, it's 1125. 1,125,000. Capital account. 1,125,000. The lower value side total is 0. 1,125,000 minus 0 means 1,125,000. The same value. BCD, PBF. 1,120. Next one. In here, debit side total 800,000. Credit side total also 800,000. There is no any BCD, BBF value. Why? Both sides are same. If both sides are same, we can't take BCD, BBF. We are just balancing and keeping it. Clear to you guys? Both sides are same. No BCD, BBF value. Let's go to the bank loan account. What is the higher value side? Higher value side, credit side. I told you most of the time, increase side is the higher value side. 400,000. 400,000 minus 5,000, which means 395. Balance carried down BCD. Balance brought forward 390. If you have any matter, just ask. Next one, creditor account. There is a matter, guys. Sorry. Ayyo. 11, number 11. An owner paid to business creditors. Just so it. Creditor liability should decrease. Look here. It's okay, because when we are getting wrong, we can have a clear idea. If the credit entry, look here, can you hear me, guys? If the credit entry in the capital account, right? So no, but what is, it's number 11, right? Yeah, number 11. So not the cash account. When credit entry in the capital account, because in number 11 you can see, go and check, owner paid to business creditor. So creditor liability decrease. So decrease means debit. Please change it. Sorry, yeah. Capital account 25,000. Just change it in here. Not the cash, creditor account. Creditor, right? Owner paid to business creditor. Trade payables debit. This is credit. It should be changed. Is it clear to you? Right? Now let's balance it. How much the total of the credit side? 290. The higher value side is 200. Deduct it from the lower value side. 290 minus 25. How much? 290 minus 25. Then means 265,000. Balance carried down. Balance brought forward. 265,000. Right? Purchase account. Keep one line and balance. Find the higher value side. Debit side 110. 110. Write it in the lower value side as well. So 108. So 110 minus 2 means 108. BCD BBF 108. Sales account. You can see the higher value side is credit side 35. Write it in the low value side. Low value side total is 0. 35,000 minus 0 means 35,000. BCD BBF 35. Drawings account. Higher value side total 9,000. 9,000. 9,000 minus 0 is 9,000. BBF also 9,000. Bank loan interest account 2,000. 2,000. It is 0. So BCD 2,000. BBF 2,000. Rent income 35. 35. So BCD 35. PBF 35 because this is 0 this side. Amara business. You can see the higher value side is debit side. Get the total. Write the higher value side total in the lower value side as well. So BCD lower value side 0. So 800,000 minus 0 means 800. BBF. If you have any matter, please ask. Don't hesitate to ask. I can answer you anything. If you are not okay with the balancing part, let me. Lower value side 0. So BCD. In right workings, BCD means balance carried down, right? BCD balance carried down, right? 7,000. PBF 7,000. I'll send a picture as well. Right. And I have sent you the full thing. Once you finish, raise your hand. So finish, raise your hands. If there's any matter, you can ask. Dinner, Liashia.
Good afternoon.
Once you finish, raise your hand. Liashia done? I already sent a picture to the group as well, right?
Okay, sir.
Okay, you can copy it down. Now, still the not, this is not enough. So we don't have enough time. I'll do it next week. We do the next part. What is the next part? prepare the trial balance. Still you don't know how to prepare the trial balance. By referring this, I'll prepare the trial balance next day, right? So my plan is to do the class tomorrow as well. I'll update the group. Clear to you guys? Hello, can you hear me? Right? But sometimes it depends. If I will be able, the class time will be 3 to 5. If not, the class time will change, not tomorrow, to another day, right? Okay. So right, so still we are in the double entries. We need to go faster, but I'm still building your backgrounds. Once the background is done, we fast, right? Thank you for the participation. Let's meet on tomorrow or Thursday, right? I'll update the group tomorrow morning. Keep in touch. Thank you for the participation. Bye. God bless.
Bye, sir. Thank you, sir. God bless.
Okay.
I saw.
Bye.